Hey everyone, welcome back to Corporate Decoder, the place where we break down these massive corporate filings so you don't have to. Today we're diving into Globus Medical's latest report, and let's just say there's a lot to digest, especially with their recent big acquisition. Globus Medical, a company focused on improving lives through medical devices for bone and spine issues, just dropped their quarterly report, and wow, it's a big one, detailing their financial health at the end of June 2025. They've had a busy few months, especially with that Nevro merger we've all been talking about. Today we're going to cut through the jargon and tell you what these numbers really mean for the company and for their future. Let's start by looking at the big picture, their balance sheet. As of June 30, 2025, Globus Medical had total assets of just under $5 billion. Now, compare that to December 31, 2024, when their assets were over $5.2 billion. So roughly a $275 million decrease in their total assets. This might sound concerning, but it's largely due to how they accounted for cash after the Nevro merger, which involved a significant cash payout. Speaking of cash, look at this line, cash and cash equivalents. At the end of June 2025, they had about $229 million in cash. This is a huge drop from the $78.4 million they had at the end of 2024. Again, a lot of this is due to the cash used in the Nevro acquisition. Their accounts receivable, what customers owe them, stands at about $611 million in June 2025, up from $557 million at the end of 2024. This increase generally comes with higher sales, which is good, but it also means they're waiting on more money. Inventories are up significantly from about $659 million at the end of 2024 to over $772 million by June 2025. This increase is likely tied to integrating Nevro's operations and products, meaning they're stocking more goods to sell. Now let's flip to the other side of the balance sheet, their liabilities. Their total current liabilities, what they owe in the short term, dropped from $855 million in December 2024. To about $24 million in June 2025. A big reason for this massive decrease is that their senior convertible notes, which were almost $444 million, were paid off. That's a huge financial move, reducing their short-term debt burden considerably. And indeed, you can see their senior convertible notes went from nearly $444 million down to zero by June 2025. This is a major deleveraging event. Moving on to how they're performing, their income statement. This is where we see the impact of the Nevro deal. Net sales were $745 million for the 3 months ended June 2025, a solid 18.4% increase from $629 million in the same period last year. For the first 6 months of the year, net sales went up to $1.34 billion from $1.23 billion, an increase of about 8.7%. This growth is clearly showing the combined power of the businesses. But the real headline grabber here is the bargain purchase gain. They reported a gain of over $110 million in the first 6 months of 2025 related to the Nevro merger. A bargain purchase gain happens when you buy a company for less than the fairly they got a good deal. This significantly boosted their net income for the period. So their net income for the 3 months ended June 2025 was a huge $22 million, way up from just $31 million in the same period last year. And looking at the first 6 months, net income soared to $278 million compared to only $24 million in the first half of 2024. Clearly, the Nevro acquisition, despite its cash cost, has had a massive positive impact on their reported profitability, largely thanks to that bargain purchase gain. It's also worth noting their stock-based compensation. For the first 6 months of 2025, they recorded over $53 million in stock-based compensation costs, which is a significant chunk. This is largely tied to the integration of Nevro's employees and their stock awards. Now, let's glance at their statement of equity. This shows how the ownership value has changed. You can see their accumulated other comprehensive income, which reflects unrealized gains or losses on investments and currency adjustments, improved from a loss of $6.8 million at the end of 2024 to an income of $10.2 million by June 2025. This is a positive shift, indicating better performance in those less direct areas of their finances. Their retained earnings, which is the profit they've kept over time, grew nicely from about $1.150 billion at the end of 2024. This shows consistent profitability growth over the long haul. Let's move to the cash flow statement, which tells us how cash is moving in and out of the company. Net income for the first 6 months of 2025 was $278 million, a huge jump from $24 million in the same period last year. This is the most direct indicator of their improved financial performance. Cash from operating activities came in at about $255 million for the first 6 months of 2025, up from a little over $106 million in the first half of 2024. This is excellent news, showing that the core business operations are generating a lot more cash. However, when we look at investing activities, there's a big outflow. They used a staggering $252 million for business acquisitions in the first 6 months of 2025, mainly for the Nevro deal. This aligns with the massive cash payout we saw earlier. Financing activities also show a substantial outflow. They spent over $215 million repurchasing their own stock in the first half of 2025. This is up from about $84 million spent in the same period last year, signaling a strong belief from management that their stock is undervalued or a strategy to boost earnings per share. And topping off the financing activities, they repaid nearly $450 million of those senior convertible notes. This massive debt repayment, combined with the acquisition costs, explains the large net cash used in financing activities, which was over $660 million for the 6 months ended June 2025. This whole report is really shaped by that big Nevro merger. As of April 3, 2025, Globus Medical bought Nevro for about $5.85 a share, totaling a deal worth roughly $2.6 billion. This acquisition is a massive strategic move, aiming to combine strengths and achieve significant synergies. Because they are the accounting acquirer, past financial results may not look directly comparable. The Nevro merger was finalized on April 3, 2025, and it's reflected throughout these numbers. The total purchase price for Nevro, including paying off their debt and equity awards, was a massive $252 million and some change related to Nevro's operational costs, not the overall deal value, which was much higher. They recorded a bargain purchase gain because the fair value of what they acquired, especially with deferred tax assets, was greater than the purchase price. This is a key reason their net income looks so good for this period. Now, no corporate report is complete without mentioning legal stuff. They're involved in a few lawsuits, including the Moskowitz family LLC case, which went to a jury and found in favor of Globus, though Moskowitz is appealing. Then there's the Pimenta litigation involving Nuvasiv, which is set for trial soon. These are ongoing and the company hasn't recorded any liabilities yet outside of legal fees, but they do acknowledge that outcomes could materially impact them. On internal controls, management states their controls are effective. However, they excluded Nevro's internal controls from their assessment because there wasn't enough time to properly evaluate them after the merger. This is pretty standard practice after a big acquisition, but it's something to keep an eye on in future reports. So what's the story here? Globus Medical has clearly made a bold and transformative move with the Nevro acquisition. On the surface, the financials look fantastic, with net income and operating cash flow soaring. The massive debt payoff is also a strong sign of financial health and confidence. However, the company did have to shell out a lot of cash and take on a lot of new operations. The huge drop in their cash reserves and the subsequent increase in inventories are direct consequences of this massive deal. The bargain purchase gain is a real win. But it's important to remember it's a specific accounting event, not necessarily an ongoing operational boost. The real test will be how well they integrate Nevro, achieve those promised cost savings and revenue synergies, and if they can continue to manage their debt and operating expenses effectively. The increase in selling, general and administrative expenses, largely due to the Nevro merger, needs to be monitored to ensure it doesn't eat into profitability too much. Their core business growth in musculoskeletal, skeleton, in revenue synergies, and if they can continue to manage their debt and operating expenses effectively. In summary, Globus Medical is in a period of significant change. The Nevro acquisition is a huge bet on future growth and integration success. The short-term financials are significantly boosted by accounting treatments of the acquisition, but the long-term success will depend on operational execution. Alright, that's our breakdown of Globus Medical's latest filing. What's your take on these numbers and what they signal for the company's future? Do you think the Nevro merger was a masterstroke or a risky gamble? Drop your thoughts in the comments below. If this analysis was valuable to you, smash that like button. It really helps us out. And subscribe to Corporate Decoder for more deep dives into the financial world. Don't forget to join our Discord community, linked in the description for more discussions and insights. Thanks for watching, and we'll see you in the next video.